All right, fellow AMC opposed XMAX trading here. Let's look at Yahoo Finance talking about AMC and the earnings report. It's been a cruel summer for self-described apes who make up the diehard shareholder base of AMC Movie Theater, joining forces to drive the stock up to heights of Wall Street analysts consider absurd. Its earnings report later on Monday, which is today, may offer at least some short-term relief. The stock has rallied in the trading session, has followed each of these last 6 earnings reports, notching a one-day gain of almost 7%, even though it's only posted a profit once in those quarters and missed Wall Street's average earning estimates in 4 of them. Yet the gains may not last. If professional securities analysts are in the right ballpark, more pains than sort ahead over the long term. The average price target calls for a further 82% drop to $5.87 in the next 12 months. None of those 10 who cover the company recommend buying the shares. That's kind of shocking for these people to say that, because, who are these analysts? And also, what about all the hedge funds buying up AMC for the long side? Not financial advice. AMC is already down 50% from its peak in the beginning of June, testing the faith of army of retail traders. We're not testing anyone. We're pretty strong. Who hope to send to the moon. In the process, burn the hedge fund short sales like Ode Asset Management that are reportedly betting against the shares. Of course, the era of meme stocks, the wall of cash thrown around by social media mobs, can be rendered basic measures of essentially meaningless. Basic measures of value render basic measures of value essentially meaningless, making predictions of professional analysts nearly as dubious as well conspiracy theories coming from apes trying to pump AMC shares. Consider the average price target is 350, 1/10, right? From risk management, AMC is a horror movie for anyone approaching it either long or short. Stock trades so much on non-fundamental developments that rather be securities analysts. Eric Wold said it's neutral. It's the only rating that is appropriate. I mean, there's a classic phrase in Wall Street: if you're against it, short it. Put your money on the line. If you think it's gonna go down, short it. It's impossible for you to know what drives retail investors to buy shares and which stock to jewel they want to focus on the meme situation. He said by phone, it would have to be retail to push higher given the valuation of the company relative to peers. Tough to make an argument. The institutions are looking at the stock in a long fashion right now. There are institutions looking at AMC long, and it's not necessarily the fundamentals of the company, although those have improved. It's the short squeeze play. It's the supply and demand of the stock itself, not financial advice. Shares of the theater rose 2.6%. Yeah, AMC spokesman did not respond to Bloomberg, right, because you guys are trying to kill AMC. Indeed, forecasts of negative earnings through at least 2023 and price-to-sales ratio of almost 12, 8 times out of the Russell 2000 index, are far from the most important metrics to consider like stock AMC, at least in their term. Rather, the enthusiasm of social media is all that matters. The pep talk the CEO Adam Aaron gave to his loyal legion of investors. Retail investors are more likely to be relevant in the earnings day than the numbers themselves. So, his embrace of meme stock, they're really hitting Adam Aaron. The embrace of meme stock traders helped to sell more shares and bolster the balance sheet battered by the pandemic. He's given the apes a seat at the table at earnings day. Executives will answer some questions submitted by individual investors in addition to those from analysts. By one metric, the social media buzz for AMC is at still at blockbuster levels, although well off its peak. The company's ticker summary repeated more than 114,000 posts on stock tweets last week. That's down from 440,000 in June, but still accounts for 1/10 of the posts from stock tweets. The more buzz, the words of social media, the greater chances of old-fashioned metrics like profits and losses and sales growth will matter again. The apes will have won some battles against their hedge fund foes, yet the war is far from over. I believe in the long run, prices sync with fundamentals. Ben Axler. The short seller who runs Spruce Capital Management doesn't have any position in AMC. You just have to have a long enough time horizon to be capable of stomaching the volatility. After it squeezes up, then it might come down. So, all right, guys, later.